We are covering inland marine insurance for the property and casualty exam. At its core, inland marine insurance covers property that is movable or in transit over land, as well as certain specialized types of property that require broader coverage than a standard property policy provides. The name is a historical holdover from when insurance was primarily for goods transported by sea or ocean marine. As transportation shifted inland, the term inland marine was created to cover property moving over land. For the exam, you must understand that standard property policies, like a homeowner's or commercial property policy, provide coverage for property at a fixed location. Inland marine insurance fills the gap by covering property that doesn't stay put. A key concept tested is the idea of a floater. A floater is a policy or endorsement that floats with the covered property, providing coverage wherever the item goes. A common example you'll see is the personal articles floater, also called a PAF. This is used to insure valuable personal property that has limited coverage under a standard homeowner's policy. For instance, a homeowner's policy might limit theft coverage for jewelry to only $1,500. If an insured has a $10,000 engagement ring, they need a personal articles floater to cover its full value. On the exam, you'll need to identify which types of property are typically insured under a PAF, such as jewelry, cameras, fine arts, and musical instruments. A major feature of these floaters, and a frequent exam point, is that they provide open-peril or all-risk coverage. This means the property is covered for all causes of loss except for those specifically excluded. This is much broader than the named peril coverage often found in a standard homeowner's policy. Another key distinction is that items covered under a floater are typically scheduled, meaning each item is listed individually with its appraised value. This contrasts with the unscheduled blanket coverage that applies to general personal property. An exam trap to watch for is confusing personal floaters with commercial floaters. While the concept is similar, commercial floaters cover business property. A classic example is a contractor's equipment floater, which covers a contractor's mobile tools and machinery as they move from one job site to another. Another commercial example is transit coverage, which protects an owner's property while it is being transported from one place to another, like a shipment of inventory moving by truck. Finally, you must understand the concept of a Bailee. A Bailee is an individual or business that has temporary possession of someone else's property. Think of a dry cleaner or a computer repair shop. A Bailee's customer policy is a type of inland marine insurance that covers damage to the customer's property while in the Bailee's care, regardless of the Bailee's legal liability. The exam will test your ability to distinguish this from property the business owns. Here's a simple way to remember this. Inland marine keeps property afloat, even on land. This phrase reminds you that these policies cover movable property that floats from place to place, providing broader, specialized protection that standard policies don't offer. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.